All right, all you devils, happy Friday. Here we are, June 9th here. Oh, it's early afternoon here. We'll catch up on Bitcoin. Oh, I thought we'd keep it very simple here and work with a little market structure. The Elliott hasn't changed much since last week or the week before. So, but again, we can just work with some really basic market structure here, and I think we can come to some. Oh, we can outline some areas of interest. We've talked about it a little bit, but perhaps we'll take a different approach here just to keep it simple, which is kind of my theme of late, just trying to simplify where we can. So here, you'll note a couple of things. One, I'm on BitGet. They're our sponsor, right? So all my charts are going to be here. Let me get this out of my way. All of my charts are going to be on BitGet. If you're looking for an exchange, they're really good, right? The futures really are their specialty. But that link will be underneath. And then additionally, eventually here, I'm going to bring in Sonar Labs indicators for market structure. We work with them, and we have a little, we're an affiliate of theirs. So if you wanted to use our link, okay, great, right? It supports the channel. We're not talking about big money here, but you additionally, right? I think we get $5, something like that. But you get 10% a discount right on their monthly fee, which I think is $59. Right? It's very reasonable for what you get. So if you have an interest in market structure, I can recommend them highly. They've just in fact done an update, and I'll put some links below and some training I've done. If you're not familiar with market structure, I find it hard to believe that if you're online, if you're on YouTube at all, right? I mean, market structure or SMC, right, or ICT, right, who kind of popularized this. It's everywhere you look, right? And as we do this analysis here, I think you'll see why people are drawn to it, right? It's just there's a simplicity to it, and there's a black and white to it that is very appealing. Okay, but we will of course look at the Elliott and see how the two complement each other. So COVID low, okay, well, we don't need to review that. Now, in the context of what we're trying to do here is simplify. Well, we could probably just call this a great big three, right? We got a big impulse, and we got a big three that corrects it. Now, obviously, we complicate the hell out of that. But at the end of the day, it's a three, right? So, all right, well, now as we look here, this is kind of the question, and it doesn't have terribly severe consequences no matter how you interpret it. So I'm going to zoom in just a little bit more. You'll note I'm not in log scale here. Well, there's only two. Well, I shouldn't say that, right? There are two more obvious views of what we have here. So, oh shit, come here. Of course, one thought is that it's all just a one. Right, we've just done this, right, and there's your nice impulse. Okay, beautiful, right? Very nice, right, and very valid, very reasonable. The only a little bit like this would be deep for a 4, but it's we have a very shallow 2. It's alternation right there. So I mean, certainly that's a valid look at it, and it's probably the simplest thing to see. What's the alternate, which gets a little bit more. It's a little trickier to make sense of it, is that we went 1, 2, and then yet again, we're going 1, 2 before we go into the big three. Is there a way to tell? Not yet. Right? To some degree, it's going to be a function of how deep, right, this retracement is, assuming it continues to go deeper. Well, how deep do we go? Well, it's really, and that's what I was saying earlier, it's really not a dramatic difference how we're labeling this. If this is all a completed 1, we're coming down to a 2. Well, now, again, we've looked at this before. Well, now we're talking about 23 to 21 and change, right? That would be your prime area of interest, most probable location for a wave 2. So, you can kind of look at all this structure here, pull it across, right? You can kind of make sense of, okay, resistance. Oh, they got through. Why are we coming back down? Okay, it's very reasonable. Well, if it's 1, 2, and this is going to play as a 1, 2, it's not dramatically different. If I can get that out of there. So if this is the 2, well, what's the difference, right? The only difference is now we're looking at 24, excuse me, get up there. We start here at 25, 24, right? So put the whole thing together, right? I mean, here's your range. Now, if you're a long-term bull and you're trading spot without leverage, anywhere in here should be a reasonable place to add to your holdings, right? I'm assuming you have holdings and you're looking for a place to add, right? It was kind of my approach. I assume you've got some Bitcoin. When the question is, well, when would be an ideal time for the market to offer up a good entry point to add some more, right? I mean, shit, you can buy some right now today, right? If you've got a 5-year horizon, I don't think you have to worry about it. But if we're still trying to time this as technicians, well, where can I really get a nice entry? Well, you could simplify again. You could say, okay, well, if this in this swing, if this is the low, if this is the one, well, 50 or below, right, would be discount, right? If the 50 is equilibrium, premiums above, discounts below. Here, if this is going to hold as our significant pivot, well, we damn near tagged the 50. We just missed it. Reasonable spot to buy. If it's down here, we haven't gotten to the 50 yet. The 50's down here. Oops. 50's down here. Excuse me. Equilibrium sitting at 23 and change. Huge difference? Not really. This would be your area of interest. Okay, well let's dig in a little bit more there and see if we can be a little bit more precise about what we might be anticipating. So for the sake of discussion here, let's just focus on a couple of key pivots. So we can look at, well, here's the low, our 15K low. Here's the retracement low, and then here's the current high. Now, if you pull back on this, right, and we look, if you're going to say, well, obvious locations, well, this whole consolidation right here seems like a pretty obvious place that you'd run into some resistance, right? I mean, you take the whole thing, pull it across. You get it up here. Pull the whole thing across, right? When there was a real battle as to what we had here, and as we were wrestling with, oh God, is there another leg to go? Well, this was kind of the battleground. Well, now, lo and behold, that's probably not terribly surprising that where we hit resistance in this movement off of this low, assuming this is a hard low, well, that's not shocking. Shouldn't be. I recall here. Right. Well, let's get you right on there. Just shy of the 50. And from this pivot here, we're just shy of the 50 here. So there's plenty of resistance up here to work through. Now, remember, of course, we got to do this one, then all the way up here. So really, to get in the clear, it's the other side of 50. Long way to go. Long way to go as we sit here at 26, right? We got to double it before we're in the clear. But okay, so all that said, right, we know what plenty of resistance ahead, right? We can understand why we stall here. Let's dig in there a little bit more. Just again, rudimentary, just as rudimentary as I can make it, right? We do so much Elliott Wave analysis here. Let's just keep it simple. Well, a couple of things we can see right off the bat, right? So once we get this low, well, there's a failure swing. So let's back it up, right? So this is, we swing, we retrace, we get a new low, we retrace. Now we get here, we get a swing, we get a retrace. Now this is a failure swing, right? It doesn't matter how you want to think of it in terms of your Elliott perspective. In terms of swing structure, there's a swing, there's a retrace. It doesn't do its job, right? It has a job to do, get a new low. It doesn't do it, right? Off we go. And as we break here, right, now we've got change of character. Well, we've got minor here, right? So this is as we get this coming back the other direction. Well, you'd probably, we call that a chalk here. You got a little chalk here, and then you got more substantial right here. Right here, we'll probably call that, probably call that a boss, right? So here, right, this is the important pivot that failed to do its job, right? So as we come back up here, break of structure. So you can start looking here. Yeah, that's a little fat here. I want you. Give me a second here. What do I want? I want chalk up. Okay, there we go. Just I like to put them in orange just so they stand out a little bit. Okay, so break it here. Here's the first tell, like, oh, hey, maybe something's up here. Oh, here's the break of structure. Well, after a break of structure, what are we looking for? Right, we're looking for a retrace. Then we get another break of structure, right? All right, let's get that on there. Let's pass up. Okay, so this is now the strong low that has done its job. it gives me a break of structure here. Up we go, retrace. Now this is an important low, gives me a break of structure, but then as we note here, we come back down, we get this little bit here, so we get a change of character. Oh, here, we'll do it that way. Okay, so this is not a break of structure because it doesn't do anything, right? It doesn't, pardon me, when we break here, you might look back to this high, but remember, it's the same thing, right? This has a job to do. Well, it gives me a change of character. It does not give me a break of structure. It'd have to all come all the way back down here. Doesn't do it, right? So it's just an internal change of character. We've been doing higher highs, higher lows, higher high, higher. Well, all of a sudden, I got that changes. Right, out at this, again, there's all sorts of internals there as well. But if we get just trying to keep it simple, well, that's heads up, right? Something's changed. Well, not too long before we launch off of that, and then again we get another break of structure here, right? So it's the appeal of this is that it either happens or it doesn't, right? It's either a break of structure, a new high, or it's something internal, right? Or a change of character. Right? Change of character, by the way, that's a Wyckoff term, right? So, but just amplifying that, something has changed. The character of the swing structure has changed. That's chalk, right? Abbreviated as chalk. Down we go, up, break of structure. Now, this is where it starts to get a little funkier in here, where you've got, this we can certainly see here, just in terms of simplification of market structure. Here's the strong low that did its job, gave me that break of structure. So here's the potentially weak high. It has not done anything other than create the series of corrective movement here that's coming down. So if you were thinking of this as impulse, well, this correction starts to look like, well, that makes sense. Impulse, correct, right? Impulse, correct. Break of structure, after break of structure, retrace. Right, from this, after that break of structure, we get right in the pocket here. Now, out of log scale, we don't tag the golden zone exactly. We do tag it if you go up a pivot. But if we just go again, let's not curve fit anything. Okay, so here's the substantial low. I get in the pocket, right? I mean, we're not always going to tag them to the tick. Well, there I'm in the pocket between the 50 and the golden zone. Boom! Look how I come out of there. How do I know it's an algo? Right. All right, it's the reaction. It's not where we launch from. It's what we do at the reaction. All right, so we pivot at it, and then there's another little kick, right? So we're getting there's additional here, change internal. I won't get into all of that, right? So there's little breaks of structure here that are at a smaller degree. Doesn't matter. Here's the strong low. Here's the weak high. So as we start coming down here, you're looking at this going, okay, well, all right, great, Sam. So big deal. How is that helping me? Well, let's just focus here now for a second. Now, this is the strong low. This is the last low that did its job. Give me that break of structure, and I got a weak high up here. But it's a high that's coming into, again, we can understand why we pause here, right? Here's the, oh shit, you probably do the whole thing, right? Just this consolidation here. But let's refine it a bit. Okay, so here we are. We get right into where you'd anticipate some supply, and boom, boom. Down we go. What happens? Lower low, complexity, but lower high, lower low. Likely liquidity sweep, lower low. So at its core here, we could say, okay, do I have a 3? Looks like I'm going to have another 3 here. So we'll look at that in a second. But as you sit here looking at this, again, can we simplify this thing? Okay, what about something like this, right? We've got a impulsive movement here, impulsive price action. I'll just say it that way, right? Not necessarily Elliott Wave impulse, just impulsive, right? Look at the big candles, right? Big impulsive price action. Now we're drifting lower, right? It's annoying when you're trading off of the daily because everything takes so long, right? And we're just naturally impatient as traders. We were like, bang, bang, I want it now. Well, you got to slow down here for something like Bitcoin here. That's going through the hard work of trying to turn that massive bear market around. Okay, well, all of the ingredients are here. Now, things could start to get ugly if we start breaking some of these pivots, right? Then all of this, certainly the bullish impetus here off of this 15K low is going to get threatened. But right now, there's no reason for us to not be maintaining a bullish bias here, despite all the negative headlines, right? Again, that's not likely to affect Bitcoin directly. It may indirectly, as crypto exchanges and crypto volume from the U.S. it starts to be affected here. But in terms of any SEC, they're not going to fuck with Bitcoin, right? So, okay, so not to digress. Let's dig in here a little bit more. Okay, so as we start this process of coming down here, I'll take this off. Well, there's a couple things that we can see in here. Well, so first, let's just do a quick back check here as to, because this was interesting. So if you were looking in terms of market structure, there's not an order block. There was one right here that got mitigated right here. So we had, let's get the whole thing on there. There we go. Right. So we had this little pocket here, tap, launches, right? So we know it's meaningful because it led to a break of structure. Now we come down, there's the change of character. Now you might look below that and say, well, how about down here? Is there anything here? Why are we pivoting right here? Well, of course, again, here's the beauty, right? Where they start to play together, right? So you say off of this pivot, oh, golden zone. You say, well, if you didn't know that or didn't care to focus on it, if you're just pure market structure, well, here I've got this imbalance here between, right? I get imbalance here. That's what a fair value gap is. It's just markets moving so fast, right? There's nobody on the other side or can't get filled. So you get an imbalance here. Well, let's take a look over here, right? We can see another one right here, right? Where we have this imbalance, right? In fact, there's another one below it, right? You got multiples here. There's plenty. Here's another one right below it. Right here. So if we're coming down, we've got areas of imbalance that the market likes to fill in. If we're coming that low, now you'll note here I also have the God MA. I should mention that here. That's the average of, I have to say it, I assume there are people who don't know what it is. That's the average of the 200 SMA and the EMA, excuse me. So it's just I use it kind of as a proxy for the Vegas wave. It's just going to give us kind of a longer term guideline, bull or bear. So as we're drifting down towards it, as we see this fair value gap here, okay, area of interest. Well, what's the next thing we might look for? Okay, well, this is the current range that we're in, which I think we could all agree that this is the strong low, this is the weak high, because this is the one that did its job, right? So if we look here and we say, okay, well, let's just look for the discount and the premium. Now it works nicely for this. Is our old friend, the wolf range, right? So here I'm just taking that range and then I'm just cutting it in half, right? Which lends itself rather nicely to the whole thinking of down here, right? I'm in the discount, up here I'm in premium. If given the opportunity, we always want to be a buyer in the discount or at, right here, you're right at 50% off, right? It literally just misses it. Buying opportunity? Well, you note here, I've just got a couple of little trend lines here with some X's on them that would suggest that we've got liquidity here. So this is just resting liquidity that's still sitting up here. So if the market comes up here, you might anticipate that getting swept. Let me take this off of here. Excuse me. All right, so we can look here and say, okay, well, likely this was a little liquidity grab here. This is untapped. Likely, same thing here, right? Likely this is just liquidity. So if we think of it down here, okay, right? Any pivot like these, right? This is potential for stop runs, right? Same thing, right? So they're not exactly even, but they're very close, right? So equal lows here, get swept, right? Get swept on that news, and then big reaction comes off of that, right? Interesting. So now we're just inside this range. So you might just look at this and say, okay, well, I do get a new high here. Now I've got just a couple of inside bars here. And again, we're still on the daily. We can see this has been swept and we just tapped the edge of the discount zone. So what else can I do here? Well, I might look here and say, well, it sure looks like I don't want to cut into any bodies, but if I cut, right, keep it to where we're just letting some wicks go through, right, for liquidity here. Oh, we might, let's clone that. See if we can get something on the parallel. Pretty good. Okay, so here's the swing. All right, let's just, again, we're trying to, my theme is simplicity. Here's the swing. I don't care how you count it. Here's the swing. What are we doing? We're retracing it, right? A very self-contained retracement that just hit 50%. Now, does that mean we're flying out of here? Certainly we could go lower, right? If your preference is to buy on sale, right, we need to get a little bit lower. So maybe we come down to the 200. Maybe Oh, can I do this? Maybe we come to the golden zone, right? Which is right in front of the 200, which happens to be right in line with these imbalances, these fair value gaps. Right? You see how we start to take market structure and add some of the TDU methodology, which is a combination of Elliott, Fibs, and geometry, and now we're just adding some market structure to it. So it plays just beautifully. So it almost wouldn't matter if this is 1, 2, 1, 2. Well, okay, we'll look at the count here that would get us there. It's here's what I can tell you. It's not giving us enough to take action, right? At this degree, it's still a little bit could be this, could be that. Now you could make a case here that you could have just been a buyer here at the 50 and you're long now. Right? I mean, it's reasonable, but on the assumption you're not trading with leverage. If you're trading with leverage, well, you better have a stop somewhere. Or you're looking at this and you're thinking, okay, well, my stops are going to be lower. I'll put them down here, maybe even under this low, depending on what your risk tolerance is and the size that you're trading. Maybe you could take a nibble here, right? As often I encourage people to do, take a nibble at the 50 and another bite at the golden zone, and then you'd average in. You'd end up with a split fill somewhere in here, right? Probably pretty close to the 200. You get a split fill, and your entire premise is based off of the fact that this is a strong low that is likely, right, should be defended down here, should be defended as the strong low because the amount of money that was committed to create this break of structure and the ongoing higher highs, this should be a strong low, thus defended by whales, banks, BFIs, banks, financial institutions, whales, BIFs, whatever you want to call them, right? People who have the capital, or institutions that have the capital to move the market, right? Not you and me, right? We just try and not get run over by them and try and tuck in behind them because we can get some idea of what they're doing. All right, so swing, retrace. Now, there's a complicated Elliott count that can get in, that's in here. We'll look at it, but let's stay with the simplicity here. So do you want to be a buyer here? Well, ideally, we'd be looking to get a little bit lower, right? So my thought would be if you were a buyer here, you took advantage of the liquidity sweep here and you went. So let's go down. Let's go to a 4 hour. Let's see how this looks. Right, so here's the liquidity sweep. So we're just talking about. Here, we'll take this one here. This is untapped. This got tapped. This got tapped here, right? We get the equal lows down here. So you have the same thing happening down here. You got potential for some liquidity down here, as this is what's down here. We all know there's going to be stops down there. Does that look like a 1-2? Looks more like an ABC is starting here. So, excuse me. That's not a great. I mean, if you're switching over to put your Elliott hat on, if you were hopeful, like, oh, okay, looks like maybe I've got a 1-2. Well, that doesn't look like a great start to the 3. Looks more like A, B, C, or something like this coming out of here. Again, we'll get to the Elliott in a second here. I'm trying to keep this short. Never seem to be able to do it. That's just consolidation. There's nobody has a clear count. What's there? Nobody knows other than, okay, that's a whole lot of nothing, right? There's a whole lot of nothing to do there. What advantage do you have there? Well, we know it can't be a triangle because we can't have a triangle in the 2, but it could be A, triangle B, and then we get a C down here. Well, what would be down here? Well, we can look here and say, oh, well, we had another imbalance here, right? Now we look at that and say, okay, well, from this, God damn it, from this low to here, right? What did we just do? Let's get you right on there. Right, down. There's never been a video I didn't show you that. Golden zone. Not a rip-roaring reaction, but I got a target up here. I know there's an algo. It's going to stay long until it gets on the other side at 65. Okay, well, I've got... This was encouraging for a bull, but if we look at that, what does it have to do here to give me more substantial signs of bullishness? Well, right now we're doing lower low, lower high, lower low, equal highs, lower low. Now we're inside. This is all just part of the correction. Doesn't matter how you count it, the Elliott, right? We're still correcting. And so we would need to start to see some signs of bullishness, right? Might start with a break of structure right here. And then we're going to go up here. So maybe we can sweep that. Sorry. Maybe we can sweep some of this liquidity up here. Right, break of structure. Right, can we get this? Well, this was a high that led to its own break of structure down here. Right, this high led to this break, which gave me this low. Right, and the retrace. Right, now I didn't get a new low until right here. So we had a little bit of a flip flop here. This looks like just liquidity grabs. Grab some of the stops up here. Grab some stops down here. But for us to turn this around again, keeping the Elliott on the sidelines for the minute, we got to get some structure breaks. We got to change this lower low, lower high, lower low. We got to get higher high, higher low, higher high, higher high, higher low, higher high. We got to get into, this is the big one, right? Because this is the last break, this is the last pivot that is within this range. For us to get a major break of structure, we got to break 31. So we stay in this corrective mode until we break 31. So do you want to be buying, accumulating down here as we go through this retracement, now having kind of simplified it? Well, I think it's pretty reasonable if we start coming down here to get into this zone. Here, this is, you might even take a little bite here because you've got an order block right here. Oh, if I open this up here, we can see it a little bit better. There's an order block right here, right? So let's go back to a daily. I think you see it better on the daily. Yeah, you do, right? So here, we looked at those fair value gaps. We know there. Well, here you can really see it, right? So you see on the daily, we've got this demand zone, right? So this is the last down before, and how do we know it's a good order block? Because of the imbalance that came off of it, right? The displacement, right, is another way of saying bears are getting bent over, right? So here's the order block demand zone, call it what you will. Here's the displacement, right? So they just get, hit hard there. So we know this is a good order block. So if we're coming down to the edge of it, we didn't quite get into it, right? We didn't quite tap it. So it kind of lends itself to, that's the whole idea of inducement, right? Oh, okay, well there's liquidity down here. Perhaps this comes down again if you wanted to really try and slice it finely. We come down here, sweep those lows, get into this demand zone here. Maybe we come a little lower, maybe we get into the 50% of this order block here, which would bump you right into the 200, the God MA. Now, here's where I think you could start comfortably adding. Again, my suggestion is, well, out here at this degree, do not be trading it with leverage, right? Just the good place to be adding here, right? What do they got there? 24.5, great place to be at. Well, that's a place that I see as an attractive place to add, right? I will be adding there, right? Now, if we're going to come a little bit lower, right, this 22, 23 range here on the implication that we're going back to this low. Now we're down here, 21 and change. Now I don't have order blocks down here, but I do have those imbalances. So there's a lot to suggest that anywhere, you see how we've kind of put it together, whether it's 1, 1, 2 or 1, 2, this whole area here, right? Again, as we dig a little bit deeper, is the prime zone, right? These would be the areas of interest for longs. We're not quite there. We just tickled the edge of it, right? But you might expect to see a little bit more, a little bit lower. Lower low, lower high, lower low, equal highs, lower low. If that's a high, lower low, right? We're going to get another, right? Until we take out some of these swings, right, where you get a change of character or a break of structure, right? Some sort of market structure shift. How do we say it that way? That's common lingo in SMC. We get a market structure shift. Maybe it's off of this order block. If it's not that order block, maybe it's the fair value gap below. But this whole region down here, very, very attractive for someone who's looking for long-term bullish entry. Now, if we look at those zones here, we can also do it this way. Oh shit, let me try that again. Let's try it this way. We'll use that low. Now here, I would do it here since this is all wicks, and then I would clone it. Right, so we just doubled it, right? So we just get another quarter of that range here. So we can see this nice containment. So yet again, right, we come back down anywhere into this pocket, even if I give it max range here, anywhere into this. Yeah, right? You want to trade some leverage? Well, keep a stop on it. You're looking for a long-term location for, you got a 3 to 5 year plan for Bitcoin. Boy, is that juicy, right? To be able to buy in the 20s, right? If you're assuming you didn't get in the 15s, you didn't get here at 19, you're coming back, you're getting another opportunity if we're going to come lower. Now, we don't know. This could be the low, and we go off to all new time highs. We don't know, but this area here would definitely be area of interest. Just off of that simple market structure, price analysis, price action, however you want to think of it, right? It's just keeping it simple. Show me, right, before, right now, if we get a break of structure here, right, so we take out something like this, what do we anticipate after the break of structure? Retrace, right? And then it starts. When we get another break of structure, what do we anticipate? Retrace, right? Now, what does that start to look like? What do we get? Another break of structure. Oh, right, it starts to look like, oh, wait a minute. So you're telling me an impulse is just a series of market structure breaks? Yes, of course, right? That's all it is. Right, now we can add some complexity here. You say, okay, well, wait a minute. What if I get an A, a B, and a C? Well, what happened there? Well, look, again, not to just keep it simple. What would we have there? We'd have a change of character, right? Now, what would we have here? If we break the 3, right? Now we've got a break of structure. Right, you see the difference between the two. This is the last low that did its job. It gives me a new high down here. It's not done anything yet. Here's the failure. I don't get the new high. So what does that look like? A, B, change of character as we take out the B, break of structure as we take out the 4 low via A, B, C. Now the trend is down. After a break of structure, what happens? Right? See, this is the attraction here. It gets very clear as to what the next trade setup is, right? This then becomes your range, and we got to go back to, here, let's do it this way. And we kind of go back this way. Okay, where's the discount? I did a full training on this, right? I don't know, probably about a year ago, right? When we first started really incorporating market structure into what we're doing, and now it's a featured part of the brown belt, which it's coming. I'm still working on it. Big project. So now if we come back into this, well, if I'm thinking 1, 2, I'm going to go into a 3. I'm going to have to break that, right? Now come back here. Oh, no. Now the whole thing starts again. I get here. I haven't done anything. What do I get here? I get a failure to give me a new low, right? So that's why I know, right? Something fails, just like down here, we fail, and then up we go. It's the same process, right? Market structure and Elliott Wave are just two sides of the same coin, right? There's just a little bit more complexity to the Elliott side of it, which is why with market structure, you don't really have anything to memorize. There are, I suppose you'd say there are rules, but you don't have 26 corrections you have to memorize, which I think is why the younger generation of traders are so drawn to this. God, somebody sent me to one of my guys sent me to a really, really talented Elliottician the other day. He said, take a look at this guy's work. It's pretty good. I'm almost 62, and I'm listening to this guy thinking, God, he sounds like my grandfather. I mean, it just made me feel like, God, the Elliott, it's really for an older market, right? So if you're 25 to 35 and you're new to the markets and you're interested in trading, my guess is the market structure is going to be a good place for you to start, right? Elliott, if you're drawn to the puzzle of Elliott, right, which I always say. That's how I was trained, which is why I started here teaching you what I was taught. Almost everything I teach here is all things that were taught to me I was just fortunate to have some really good mentors. So all of that said, okay, where are we, right? We can kind of get a plan here, and I just take a little digression here into how market structure and Elliott are so complementary to one another. Hopefully that's meaningful. I haven't bored you to death. Let's get these are all out of here. All right, all this done. Back to the situation at hand. So right now, if you make the assumption here that, well, you could look at it this way. We're just in a range here. We're just in this range, right? We had some, what happens in a range? What do? You want to sell the high, buy the low. What happens here? They sweep the pivot at the high, and then they sweep the pivot at the low. And now we're right smack dab in the middle of that. But is there any sign here that, oh, time to be a buyer? Not yet. Not yet. How am I doing? Oh, shit, I'm at 35. God, I thought I was going to do the whole thing in 30 minutes. Okay, I think perhaps there's some help there if you're not clear on market structure, or you're like, I kind of get the idea. It's much like Elliott Wave. When someone first shows it to you, watch a video, it's like, okay, well, that's pretty drop dead simple. Start marking up your charts yourself, and you'll find a little more challenge. If you need a refresher, and again, there's no shortage of places to get it, but if you like the way I teach and you want to get a straight, if you're a member, right, or if you get interested in that, I'll put links to the training that I did about market structure on TradingView via Sonar Labs as an assist. It's an older version. They've updated it now. I think we're a version since then, so it's only just gotten better, right? That's just good news. So I'll put a link to that underneath in the description if anybody wants to do a little digging on that. Okay, so with that said, I think we got our market structure, we got our areas of interest, and then let's just see how the Elliott looks. So let's just pop over here real quick, and then we'll wrap it up. And this is what I mean. Look at the difference here. Okay, so first question is, where's the 1, 2, right? This could be interpreted multiple ways. I'm kind of leaning into the 1 expanded B2 because it plays. This is my preferred count here that we've gone 1, 2, 1, 2. I will note that it's a more bullish count, right? That might be part of what influences me because I'm a raging bull. Here I have the Vegas wave on rather than the God EMA, but if I put it on, right, it's going to be damn near right on top of it. If that's 1 A, B, C into the 2, I've got a completed impulse here. I get a corrective 4. I got a 5. I got a 1. WXY into a 2. This is the mystery, right? What do we got here? We got a whole lot of consolidation up here. I got more all of this, right? So I get triangles here. I get triangles over here. All of this whole area, right? Difficult, right? Market's not happy here. A lot of trading volume in here, but ultimately we start to drop. So if we're just trying to apply some Elliott now and say, okay, well, can I make sense of this? Again, I think we can try and simplify when you can. Now there's there's triangle into the B here. There's some sophistication here. If this is A and we triangle B, then we get a C, right? We get an impulse down here. So what does that give me? It gives me a W, right? Because it would have been nice if we were done here. Off we go, but I don't. What do I get after I get that 3, right? Again, there's complexity to it. This is a little tricky, right? You've got to know some basic Elliott. Well, that's a little more than basic Elliott. You got to know some intermediate Elliott to recognize, oh, triangle, I can have a triangle in the B, and then I come 1, 2, 3, 4. I get my impulse for my C. Well, you might have been thinking, oh, okay, great. The correction's over, right? Oh, I had a 5. There's a 3. Right, we don't, right? The correction continues. And if we just dig in there, it's just a series of 3s. What we're getting is a lot of 3s. A, B, C, A, B, C, A, B, C, A, B, C. Right? There's no impulse anywhere in here other than some of the C's that finish. You can make a case you got a 1, 2, 3. It's ugly. It's mighty ugly, but okay, so we had 3 into a W. Pretty reasonable case. You've got a flat here running, oh shit. Well, we could do it either way. You could do it. You could probably dig a 1, 2, 3, 4, 5 out of that, or you could just do it as a WXY, right? I think that's how I've got it labeled here. WXY into an A wave, ABC into a B wave, right? We're expanding the B, right? We start it here, B. So what are we looking for here? We're looking for a C that would give us the X, right? So it would just be a giant flat. Where's the most common location for an X? Oh, pardon me, wrong spot. Relative to the length of the W, A, B, O. Lo and behold, where's the most common location for an X wave? Now you bring this over. All right, what's there? demand zone, golden zone. Now, what to get there? What do we need? We need an ABC, right? This is pardon me. We're looking for the C. I need an impulse. So whatever we're doing here, what I'm hoping for is I get an A, a B, and a C rather than just some sideways, what do we often call that, sideways fuckery, right? So is there an Elliott count in there? No, not yet. Hopefully that's the B. There's a C, right? We just saw we tagged the golden zone, but that's not a start on a 1. So I need an impulse here. If this is a B, I need a 1, 2, 3, 4, 5. Need that to give me the C, right? If this count's gonna, need it, right? If this is gonna hold as the count, that's what it appears right now. Now that can change, right? Elliott count, it's just a snapshot in time. Much market structure changes, obviously, of course, right? We break structure, right? Change of trend. Right now, we can't seem to get, well, here, just trying to get on the other side of the Vegas wave would be a start. It looks a little gnarly. The whole implication here is that if we do this, we're going to come down. Oh, shit, we could go golden zone here, and now we're down at 21. Well, now if we think back to what we were just looking at over here, we're coming down here. Well, here's 21, golden zone, right? Golden zone, right at the base of this. Oh, there's another one there. Look how many fair value gaps we have here. There's another one right here. So this whole area here is prime real estate for a long, right? This being right here. Right, 21, right? So you can kind of see how they play ball together. But we don't have the, oh shit, is that a triangle? That's the appeal, right? You look at this and you go, what is it? Well, do I care what it is? Do I have to label it? What I've got a low, I've got a high. What happens next? I break the low. Simple. Right? I don't have to qualify it. I don't have to go, oh shit, man, there's that little pivot here went beyond that. I can't have a D lower than the C. Forget that, right? I got a swing. I just like I have a range here, I had a range here. Right? This is the attraction. Okay, here's the high, here's the low. If I get that right on it, well, you get the point. Right? Here's my range. What happens? Low breaks. Okay. Break of structure. Or change of character. Actually, it's a change of character, right? So it doesn't matter, right? I get a new low. What's this? Am I worried about, let's see, is that an ABC? Is that a WXY? Geez, can I get 3 into that? You're not worried about any of that. I mean, you can see it, right? But you don't have to qualify anything other than the highs and lows. I got a 3 in there. That's what I got in there. I don't really care how it got there. Pivot gives me this. Okay. What happens next? Right? These lows get swept. Right? Well, here, I have a new low here, but those are just wicks here, but we sweep the lows. Now I've got here, what is it? It's inside, right? I've essentially got inside bars here. Do I care? Do I care about labeling it? What do I care about? Where's the swing structure? What's the last important swing? Well, this is all internal swing structure. Remember, if we're gonna retrace, oh shit, if we're going to retrace, if this, okay, let's just review, right? Here's the structure. After a break of structure, what are we waiting for? Right? What can we anticipate? Retrace. Right? Now, we don't know if it's going to go external here or external here. We just know that we can anticipate, we can anticipate the retrace. Well, the retrace is going to require a little downtrend, right? We can't just keep going uptrend. If we're going to get a retrace, we got to do lower lows, we got to do this, right? We got to get a downtrend to create a retrace. So what do I get here? Lower low, lower high, lower low, equal highs, lower low. Well, that's just wick. So lower low, lower high, lower low, lower high, right? You get all of it. It's all part of the same retracement. But I don't care how it's labeled. Am I getting lower lows and lower highs? Right? And where's the clear imbalance in here? And where can I see areas of interest? And can I put some geometry together here? Well, okay. Well, those channels look pretty good. And I don't have to sweat. God damn, where is that the 4? Is that an expanded B? I don't care. All I can see is that this pivot here had a job to do. It didn't do its job. When we retraced, it didn't give me a new low. So, change of character. Break of structure. Now, open to interpretation whether one break is enough for you, right? Some SMC traders will tell you one break's enough. Others will tell you it doesn't confirm till you get the second one. I prefer to see it confirm. I want the second one because that means I got a higher low that led to another higher high. Now I confirm the uptrend. But whoa, what happened here? I thought we were in an uptrend. Well, yeah, we are in an uptrend, but here's the significant low. Here's the significant high. What did we do? Well, we just went over this, right? We're right in the pocket, right? So after a break of structure, what is it we're anticipating? Retrace. To retrace, what do we need to do? We got to get a little downtrend going. We got to get a downtrend, right? Lower low, lower high, lower low, lower high, lower low. Oh, something changed. I think that's my interpretation of why this has become so popular. And fewer people are digging into complexity of Elliott Wave is because it's easier. It's easier. It is, right? Now, I'm not saying easier is better. I'm just saying I can understand why there's so much interest in it and why the younger generation of traders, again, they look at Elliott Wave and they go, oh, my grandfather was trading that. Let's do the hip. Give me the hip. I want to do what the smart money traders do. I mean, it's not like it's new. It's not like swing structure is new. It's a little bit of repackaging, repurposing, some very, very clever marketing, and it's a really talented guy. A guy who really popularized this. I always get his name wrong. I want to say Michael Hutchins, but I get it mixed up with the former lead singer of NXS. Michael Hitchens, I think. Hitchens. I digress. Okay, I think we've done it all we can do here. You'll see more and more of this as we combine the two, but I just thought I'd give you some highlights here of how we can just look at what Bitcoin's doing here and try and simplify it. That's the goal here. Can we simplify it so the trading decisions are easier, right? The other benefit here is we can get some really, really attractive risk reward. Much the same as you can with Elliott, but maybe a little bit more appealing to people in terms of how they interpret, analyze, and do their own work. Right, that's the goal. Oh shit, I'll finish up here. I meant to do this. Okay, so let's put Sonar Labs on. You'll see how that kind of fits in. Right now, I have done all this. Oh shit. Here, let's. I can't do it. I'll just remove all of mine. Right, and you can see how. So I've done it. Now here's software doing it for you. Right, just to make it okay. What's the point? Right, it's just efficiency. It's already done it for me. Now, it would be worthwhile that you did it. And so here's the break of structure. Here's the internal. Here's the market structure shift. Right? All the stuff that we just went through. Well, here's the software doing it for you for what is it? I think it's $59 a month. Again, it's like Elliott, right? You're going to appreciate an Elliott Wave software product like a Motive Wave, right, which I've used for years. You're going to appreciate that much more if you understand it yourself, right? Then you can look at what the software with the algorithm, something like Motive Wave or even TradingView here, spit out and go, oh, good God, it's not that, right? You can't interpret the same way you can, but it's going to be less subjective. Well, here, okay, well, there's a fair, remember, we just drew these out, fair value gap, fair value gap. Here's the demand zone. Here's the changing, here's the down sloping here as we just had it. Oh shit, right? As we just had it, right? Here's the channel, right? Right? Here's the equal highs. Here's the liquidity sweep. Everything we just went through, here it is, right? Even with a volume profile. All of that. Here's the strong low, right? Now they do use arrows. Here is if I pull back here, here's the supply zone that we looked at, right, coming right here. Now this is refined and it's already been tapped into once, but as we come right up to it, there it is. Here's the next one. Here's the pivot high, which is liquidity, right? You see how they kind of all play together. Now you could just as easily put in here, just say, oh, okay, well, again, let's just keep it drop dead simple, right? If you want to do this one, 1, 2, 3, 4, 5. Oh, here's equilibrium, right? Here's the 50, right? That's the halfway. Now here's where we go into discount. You see, they play so well together. again, it's not like it's new. It's just been repackaged, remarketed. I mean, Jake Bernstein and Larry Williams were teaching this in the 70s. When I was first learning, what was I reading? John Murphy's book, Technical Analysis of the Market. I can't remember. It's been so many years ago. But these supply demand zones, this is not new, right? ICT, Mike Hudgens, got to give him massive, massive props, right? He created an entire subculture of traders using smart money concepts. Got to give him props. Right, but I give props to many people, right? Most of the things I teach here are all things taught to me, right? So David Halsey for the measured move, Alan Andrews for the median lines, Ralph Nelson Elliott for the Elliott, right? So I'll give Michael Hidgens, whatever it is, ICT as he goes by, the inner circle trader. I'll give him full props, right, for all of this, right? He's the one who popularized it again. Now there's a lot of FX going on, but you see it in crypto, you see it in, I use it every day in the futures markets. Lots of good stuff here. Okay, again, if you want a little more review, those links are underneath, right? If you want to dig in and say, okay, wait a minute, I saw you do all this breakup structure, all this shit. Wait a second, I gotta understand the foundation of it. There's 2 videos linked in that playlist here that'll walk you through all the basics of it. Then you'll be able to do this yourself, right? It's not that hard. Little screen time, little practice. You got to do it yourself. All right. If you're not sure, well, then you can always use a tool like Sonar Labs, right? Our link below, if you're interested. Okay, guys, that's all I got for today. Have a good one, and we'll catch you next week.